So, Al, we talked about the futures market, which we like to say that's in our opinion, a shorter term investment
Right.
strategy for that term of short.
Mm-hmm.
So, with other assets like the Forex market and the options market, people love to use these as a longer term strategy because there's less screen time because it's a longer term strategy based on a longer chart. Remember, we talked about earlier with price charts, that's where you're identifying where to get in your positions and where to get out.
Mm-hmm.
When you have a longer term strategy, you're using a larger time frame. And that's really good for people that work during the day because they just can't participate in the stock market during the day. It's tough unless they do it over the lunch hour, but which, how can somebody do that with more confidence, right? So what would the Forex market be the best for, say, if someone wants to be a longer term trader but wants to still utilize that leverage? How could they utilize the Forex market to do that?
Well, yeah, the Forex market is where you're looking at the difference in exchange rates between two different currencies. And again, that's something that you can get the proper education on how to trade, why you trade it, when you might want to trade it. And the Forex market also is open 24 hours a day, so you get a lot of versatility there as far as when you want to trade. It has great leverage, and you use a price chart. You use a price chart that where you can actually utilize the Forex market in a shorter term trading strategy, but then also long term, because sometimes the trend can be a long lasting trend in the movement of a particular currency. And that's one of the things that we teach our students is how to use different time frames for different types of trading for your style. And everything should be specific to you. So if you're looking at trying to benefit from something in a long-term time frame, you use a chart, a time frame chart that's longer. It may be a monthly or a weekly or monthly chart. If you're short-term trading, maybe it's a daily, hourly, 15-minute, 5-minute chart. But those are important things to learn how to utilize.
So what does that mean, though, Al? If you're talking about, let's just say, a daily chart, what does that actually mean for our listeners so they can understand what price action and what time frames really mean?
Sure. Yeah, what we utilize, the chart type of chart that we use for our students, the primary chart is a candlestick chart. And each candle, and we go over this in these classes, we kind of break down the structure of a candle, tell you a little bit about why there's certain shapes of candles that can be used for different situations for determining movement of a price, for example, or changing of a trend. It's just something that helps give us a little more confidence in what we're doing. But if you have a daily chart, each candle represents the price movement on a daily basis. So in other words, where did the price open for the day? Where did it close for the day? If it's a 5-minute chart, each candle represents 5 minutes movement in price of whatever the asset is. Wherever it started, that 5-minute period, wherever it ended that 5-minute period. There's what we call the body of a chart of a candle. And then there's also what's called a wick or a tail or a shadow, which just shows some additional movement up and down, but it's the body of the candle that shows where the opening and the closing for that particular asset was for that time frame. If you're a short-term trader, you might use a like I said, a 5-minute chart, maybe a 1-minute chart. Longer-term investors are going to use a longer-term chart, but it's important to know how to read those charts. What the significance of the candles are and what the significance of the size or the shape of the candles. Those are all things that we teach. Again, everything you need to know is on a price chart like that. Those candles are telling us a story. We teach you how to read that story.
And think about this as a map. Okay, we all have a map on our cell phone. And say you look at the whole map of the United States. So when we're teaching our students the different tools and rules for investing decisions, what's the big picture look like? So you can zoom out on a bigger time frame and see the whole, United States.
Right.
And then if you want to narrow it down and get more specific, you can zoom in. I think it's the 2 fingers, you pinch it, or I think you pinch it. On the phone, and you zoom in, and you get a smaller time frame, we'll call it, or smaller area space of square footage or square miles. How do you want to call that? But then you have a better idea on where you're going because then you can see the smaller roads, not just the whole United States, the small roads, Highway 494, 94, Highway 10, whatever that may be. You can even dissect it even smaller if you're a smaller term trader. So it's understanding the right tools and the right rules to make decisions within those. We haven't covered one of our favorite assets. It's options. But the great thing about options and our listeners, there's a correlation there. Our listeners probably love stocks. Well, you utilize stocks with the options market. Why are so many people gravitating toward that? I'm guessing because of the leverage.
Yeah, it is a number of things, a number of reasons. Options is probably the fastest growing asset that's out there. I would say the majority of our students that come in that have been stock traders, once they learn about options and understand the benefits, most of them say, I'm never going to buy another stock again. And you don't have to. You can have a stock substitution strategy with options, but options will allow you to do a number of things. How would you like to get paid to wait until the price gets to where you want it to go? If you want the price to go a little bit lower, you're willing to pay, let's say something's trading for $130. You don't think it's worth $130, but you think it's worth $120. You'd be willing to buy at $120. How would you like to get paid cash right up front to wait until it goes down to $120? You can do that with options. What if you own something, let's say at $130 a share, you want to sell it, you need to maybe collect a little bit of cash, you want to sell it, but you really think you'd like to get a little more for it. You'd like to maybe sell it for $140, but it's right now trading at $130. How do you trade it? How do you sell it at $140? You wait. You get paid cash to wait until it goes up to $140, and then it's sold. That's what you can do with options. You get paid to be patient. You get paid to wait. You can have an insurance policy on a portfolio. If you've worked hard for 30 or 40 years and you have a nice retirement account, what can happen to that account? If we go through a bear market, maybe 30, 40, 50, 60% of it could just disappear, evaporate. Options can be used as a protection, as an insurance policy, so to speak, to protect that. Options can be used to give you the opportunity to have a benefit, a profit, if the market's going down or if the market's going up, or even if it's sideways, because we haven't seen this for a while, but we do go through periods of time where it's like the market is asleep. It's just trending sideways. Well, options can be used as a way of just generating income off of those sideways moves.
It's actually kind of been sideways for the past few months here, really. I mean, it hasn't done a whole lot.
Yeah, that's a good point. It may have been sideways. If you look at where it started maybe a couple of months ago and where it is now, maybe the beginning point and the end point aren't that different. But during that time period, there were big moves up and down. And each one of those presented an opportunity. Options can be used in short-term trading also, but for your long-term portfolios, if you have a retirement account, you want to make sure, number one, it's protected. You can do that with options. Number two, you want to make sure that it grows. You can do that with options. A small amount of money in an options position can control a big multiple of the number of shares. Also, the profit potential there's kind of a leveraged amount there, a multiple. And options can be used as a substitute. If you don't have stock, but you'd like to participate in the stock market, you can do that with options, but with a much smaller upfront amount.
Because of that leverage that allows you to do that.
Exactly.
And these different techniques and concepts that Al's talking about, especially he was talking about getting paid to wait. And the concept doesn't make any sense. I can do that. Well, I was talking with one of my good friends one day, and we were talking about that strategy, and he said, just think of it this way. It's because you can, right? The concept doesn't make a whole lot of sense. But if you can do that, or if you have the opportunity, I should say, there are those strategies. But especially with options, we're seeing more and more people with these market conditions hopefully have done well the past so many years, but want to start protecting that and basically place insurance on their portfolios. Everybody has insurance on their homes, their cars, themselves. If you're listening right now, do you have insurance on your portfolio?
Well, you know what? Sometimes, Josh, we're presented with opportunities that may not repeat themselves. And if we don't take advantage of them, they're gone forever. So the key is to be prepared to take advantage of these opportunities. That's the formula for success. It's when preparation meets opportunity. And right now, we're being presented with some of these opportunities. Quick-moving markets with big movements up and down that really give us a chance to improve our market returns. But you can only do that if you have the proper preparation. That requires the appropriate knowledge and the skills to use the knowledge to your advantage. That knowledge and skill building is achieved through proper education along with the rules and tools specific to your goals.
Do that and start now. How you start is having a plan. Same time, same place next week. Until then, retire young, my friends.